We have Robbert Gelfond. He is chairman and founder of MQS Management. Bob is a former director of international trading at D.E. Shaw, and we're lucky to have our own Bloomberg's Massar. Carol, it's always a pleasure to be with you.
Nice to be with you, Pimm. And I'm hearing you talk about what's going on in Greece. I mean, the statistics, Bob, are crazy. I've been tracking a blog done by Keith Miller over at NBC News, and he's talking about life on the street for the Greek people. I mean, it's outrageous. You've got people living on the street. There's food lines. You've got hospital admissions up. Suicide rate is up 40%. I mean, this civilization is coming undone, and yet we're focusing on the creditors. We're focusing on the bankers. But this is a country that's really falling apart.
It's an unfortunate situation, and as you say, a tragic situation from the human standpoint. Unfortunately, the only way that they're going to get out of this situation is that they have to put in the reforms that are going to allow economic growth to reappear. The only long-term...
Can they do that, though, with all these people already in a tough...
a lot of that, unfortunately, is going to be a political solution. You know, they have elections in a few months, and depending on what goes on with the ongoing negotiations and how, you know, whatever new government appears after that, we'll see. Unfortunately, or fortunately, hopefully the crisis won't get much worse before they make the changes necessary. Unfortunately, it may have to get worse before they really realize there's no alternative in terms of deregulating their labor markets, cutting a lot of these pensions, a lot of the government jobs, but and also adding, hopefully, to efficiency by privatizing more. And if they do these things, you'll actually get private capital start coming back into the country, and that could make growth take off a lot faster than people expect.
Bob, come on, man. I mean, you know, really. I mean, if you lend money to someone and they can't pay it back, you take a haircut. You take a cut. You don't do all of this bookkeeping that just revolves the money around in order to make your own books look good, or do you? I mean, come on. How are they ever going to dig out from underneath this debt load? Shouldn't they just say, look, we're going to default, we're not going to pay, let's go back to some kind of, you know, currency that we can actually devalue? Because there was a report today that said, one of the ministers that actually resigned, they talked about how Greece is a country that's going to be saddled with Bulgarian-level salaries, but they've got, unfortunately, Brussels-levels prices. I mean, come on.
Well, they're going to have to reduce their salaries and their costs internally, make their country more competitive with other countries. They can do that through inflation, or they can do that through deflation. Either way, they're going to have to go through that transition period. I think they're better off staying in the euro, doing that through deflation, specifically cutting salaries and whatnot. But if they make these other reforms I talked about, they can get growth going faster than they expect. There's no doubt that their debt load is too high, and they're, you know, one way or another, they're going to have to reduce that.
How do you turn around, though, that growth equation so quickly? I'm sitting here listening to you. I mean, if they could have done that, wouldn't they have done it before? Because those, you know, debt to GDP levels have not been good for a long time.
Unfortunately, a lot of countries don't do the right thing until they have no alternative. They have such a large public sector, and there's so many people who are wedded to that model, so it's hard to make the transitions. But when you're faced with no alternatives, that you have to get rid of a lot of the waste. Hopefully you can make that change, and other countries have gone through this. Other countries in Asia 20 years ago, South America made a lot of these reforms, and it's not a matter, it doesn't take 4 or 5 years. It can actually happen. You can start to see those shoots of growth come back. You can start to get investor confidence back and start bringing money back into the country, so you don't have to worry about the IMF, the various alphabet soup of European groups who are potentially lending money to them.
Is there anything that would convince you that austerity is not the path forward for Greece and other European countries?
Well, I don't know what the alternative is. I mean, they're trying to keep themselves afloat with all these various aid packages and whatnot, but how are you going to rekindle growth?
Well, how about letting some of the banks that hold all this Greek sovereign debt fail? The banks go out of business, and you help to recapitalize the Greek economy by pumping money into it.
I have no problem with that, and I think that should be. Lenders who make bad loans should be punished. We haven't had that, and I think that's part of our problem, not just in Greece, but elsewhere. But you're going to have to get people to bring in new capital into the country. You're going to have to show them that they're going to get a return on their investment by buying equity, by buying into new businesses. That's what I'd like to see, more privatizations take place, because not only does the government raise revenue that way, but by putting these assets into private hands, they actually make things more efficient. Yes, in the near term, jobs will have to be cut, but if you restore growth, that's how you end up with a vibrant, dynamic economy.
So in other words, don't throw good money after after bad, and you want some reassurance that that's not going to happen. And we've got a think tank here. We have Robbert Gelfond. He is the chairman and founder of MQS Management. Also joining the conversation, Yannis Ioannides. He is a professor of economics at Tufts University. And we have Douglas Borthwick, managing director and head of foreign exchange trading at Faros Trading. All right, Douglas Borthwick, I got to put it to you. Yes, you know, you got the good call so far, right? The euro moving higher. Should we look at what's going on in Greece and connect the dots between that and what happens to the euro, or do we just say no, delink the two?
I think there is a definite delinkage going on right now, and I think that people have an understanding that at some point within the next week or so we will see something. Now, Sunday night should be the parliamentary vote, and that could be it. That could be not the end of the problem, but certainly the end of the headlines that are constant and always moving around these markets. I think what you're saying about China is very important. There's been a real change in the last week, really starting over the weekend when Premier Wen was in the newspaper in Xinhua News, really discussing what China is to Europe and really sort of putting to the people of China why they should be helping Europe. And it's important because before, China looked at Europe as being a very rich area, and why should China, a poorer country, help a rich country? And now the IMF is very fortuitously come about and said, well, you know what, if Europe goes down, you could lose 4% of your, or half your GDP, go from 8.2 to 4.2% GDP. Well, now they have something that they can sell to the people. And you've seen that the foreign minister, the vice foreign minister, as you just mentioned, but you also saw a number of the academics also talk in the local press discussing this. And so we see there is a little bit of a change here. That's not really sitting on the fence anymore. They're much more engaged, and they're talking about using an international financial institution to invest in the EFSF, ESM. So that's obviously the IMF investing into the EFSF or ESM. Now, the details haven't come out yet, but Japan's obviously been trying to push China into doing this as well, as has the UK. Japan for their own reasons, because they're worried about where euro-yen is. And obviously, if they can intervene on their own, well, that would push up euro-yen only for 2 or 3 days. But if China was to come in and Japan and help with the IMF and EFSF, that would push up the euro and alleviate the stress in Japan.
Yannis Ioannides, come in on this, and I'm wondering whether all of these packages, whether they come from China, whether the money comes from the International Monetary Fund, will any of it ever really get to the Greek people?
Well, the issue is actually, and it was very well described in the previous conversation, is competitiveness. Nothing will happen until and unless Greece gains competitiveness. And there are two sides to the story. One is the wage price spiral, disinflation. I will say more about it in a second. And the other is investments. Investments which improve productivity of labor, improved overall productivity. And to that extent, China is a good actor directly in Greece. You know, there have been investments by China in Greece. China runs the port of Piraeus, and there are some very encouraging things happening there. The press used to talk about unfavorably, but now it's talking more favorably. But the crux of the matter is that Greece, the economy must be restarted. The austerity is hurting. The austerity has to be redesigned somewhat. More investment is needed so as the depression in aggregate demand does not translate totally in the killing of investment.
Bob Gelfond,
Yannis
says that there's a possibility that if there are changes in what happens in Greece in terms of salaries as well as productivity, that maybe you get some private investment. All right, you manage other people's money. What would you want to see before you would commit capital to buying assets in Greece?
Well, in general, since we don't trade Greece specifically, but you want to see the regulations change so that labor is more flexible. You want to see these types of privatization so there's more the assets in private hands, as we talked about. And once you start to see that trend going where there's more hospitability towards foreign capital and foreign investment, and trying to keep taxes relatively low. All these things that are going to make investment want to come in. That's a sign that things are ready to turn when that starts to happen.
Now, when you talk about taxes, do you mean taxes on individuals or taxes on corporations? Because they've just introduced a whole ream of taxes on individuals. Indeed, they're using Google satellite photographs in order to find people's swimming pools so that they can put a tax on them.
Well, Greece and certain other European countries certainly have a problem with compliance, and the government needs to raise a certain amount of money. So you want to have a tax system that's as efficient as possible, not to be too intrusive. So you want to keep tax levels relatively low as you possibly can. But once you start to see those efficiencies starting to come in, that's going to be a sign that private capital is going to come in, and then things will start to turn.
Douglas Borthwick, just start us off a little bit. The euro versus currencies other than the U.S. dollar. The euro's been weakening against almost every other currency.
Well, it's been used really since, I guess, mid-December as the funding tool. So people have been short euro against the Aussie, short euro against the yen, short euro against the Mexico, short euro against high yielders, other than obviously the yen. And what you're seeing now is an unwind. So you've seen Euromex turn around a little bit, Euro Aussie turn around a little bit, because there is an unwind happening of that flight to quality into the dollar that's seeing the euro now rally, and you're seeing this sort of slight move up. Now, is it over for the euro crosses to go lower? I don't know, but for the euro against the dollar, I think it is over on the downside. I think we're going to see much more upside. All
right, we're going to continue the conversation. I want to give my thanks, of course, to Robert Gelfond of MQS Management. I want to bring into the conversation Robbert Van Batenburg. He's the head of research at Lewis Capital Markets. Robert, a pleasure. So what do you think about the negotiations that have been going on in Greece and the supposed deal-making efforts that are happening? Is it really going to solve anything?
Well, at least there's enough pressure on the Greeks right now to come up with something substantial. But I think the German Minister Schäuble was already downplaying it, and he was saying that the proposals were not in line with what they were looking for, and that they actually want to first see the Greeks implement the first austerity plan before they're even contemplating of coming to an agreement and allowing the funds to be released. So there's a lot of back and forth. I do have hope that in the end we're going to have some sort of a resolution. I mean, we know we have a bond payment due in March the 20th, so that has to be resolved well before March the 20th. I think February the 15th is something of a cutoff point, because they need at least a month to get all the bondholders on board. So there's probably something that's going to be agreed upon, and then you're going to have what I call we're in the eye of the storm. So it's going to be a quiet period, and then we're moving into the second quarter. You have, Greek elections there, unless they're going to get postponed. But in the end, I think the market will remain fearful whether Greece can either actually implement those measures. They haven't really implemented the first austerity round of measures, and whether they're going to fail again, it's probably later in the year, and then we're back to square one. And we're going to keep on muddling through this and dealing and brushing out one fire after another, and until there's actually some sort of resolution. And the bottom line is, the Europeans, the European governments, they spend like drunken sailors. Their economy is structurally uncompetitive. They have an entitlement culture, and that's not limited to the Greeks, but it also pertains to the Italians. I'm from the Netherlands. I know they have an entitlement culture over there, and they look good right now. They look like the best of the breed, but let's not fool ourselves here. So a lot has to happen. And of course, they will say, well, America has to change too. This is true, but I mean, this is the structural problem that Europe faces, and that's not going to be solved this weekend.
Yannis, come in on what Robert is describing. I mean, is it possible that there's no more credibility left for Greece? I mean, is anything going to be able to save the economy? What kind of time frame are we talking about?
Well, it is true, of course, that Greek politicians did not improve their international image during this haggling, where it appeared that relatively secondary things were being negotiated ad nauseum. But the fact remains that there is a public, and the public is really understanding more and more the need for reform. Yes, when your income is slashed in the way that has happened and it's been proposed, when 1/5 of the labor force is unemployed, and there are more people inactive out of the labor force than employed, according to the latest numbers from Elstat, people are discouraged. But politicians are getting the message that they have been incompetent. The government understands that it needs to do something, not just show that it's doing something. And this is painful because it's long overdue. But I think the public understands the need for reforms, and the public is prepared to suffer much more, but only if it sees Only if it's persuaded, the results will come out. And I think that is the issue, the most important issue, the credibility issue is right there. And the government has made, is more successful now. The Prime Minister is a superb manager of this very difficult situation. This would not have happened. The agreement this morning would not have happened were it not for Lucas Papadimos.
We've got to leave it.
But the fact...
We've got to jump in there. I want to thank you very much, Yannis Ioannides from Tufts University. I want to give my thanks to Douglas Borthwick of Faros Trading.